Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Tuesday, May the 11th, 2010, and as we suggested yesterday, the bounce is a short opportunity. It's rolling over. Let's look at some charts. Before we begin, I'd like to take a moment to just thank every one of our members and subscribers on YouTube, everybody who's helped us and supported us along the way. Last night, or today I should say, we crossed 200 subscribers on YouTube channel. That's awesome. Our free website that we've made for you is growing as well. We can't do this without you guys, so when you show your support like that by and referring your friends and sharing our videos online, that really helps us a lot. As I've told you guys before, this comes out of my own pocket to run this site for free, so I really, really appreciate this. Thank you very much, and let's continue doing that, okay? All right, let's look at the chart. This is the Dow Jones 6-month chart. You're looking at each one of these candlesticks being one day. We told you yesterday's bounce was a short opportunity, and today's signal is a inverted hammer. Okay, the inverted hammer is a sell signal. They can fight it, but once you've seen them, even though the market may fight them, the end result is still the sell-off, and that's what you've got right now. You've had the big bounce, inverted hammer right here, and what I want you to point out right here is this blue line right here. This is a 50-day moving average, and a lot of technical guys will use moving averages in different ways, but one of the common methods is to stay long the overall markets or the overall chart as long as it trends above the above the 50-day moving average. Okay, so back here you were trending above it, they would stay long, and then when it closed below it, they would get out. And right here you had that breakdown of the major uptrend that we had in that bounce. So that's back on January 22nd. So that was our first sign of trouble getting to the market right there. Then you had this 8-week period of, 8 solid weeks of gains in the Dow Jones Industrial Average, and then that snapped again and fell below for a second time below this 50-day moving average. That's their second time. Typically, the market will warn you once, slap you the second time. So this is it. You got the warning. Now you've broken down again. Everybody knows this is really the end, and today you've got this inverted hammer, and you notice you're finding resistance now right there at that blue line, that 50-day moving average. Basically, I'd be shorting like there was no tomorrow. Okay, that's what I would be doing right here. I'm going to show you some more charts, but all of them look the same. It's very bearish out there. You don't want to be long this market, and it's not just because of Europe. We talked about this yesterday. There's many fundamentals out there. Last night, Asia came out, and news came out about Asia's sort of looking for. Sorry, I lost that word. Inflation was ticking up in Asia, and that means that Asia's going to have to, or China's going to have to raise their interest rate. Maybe not immediately, but they're going to have to do that, and that's going to further stifle their recovery, which is already slowing down. And that, along with Europe's slowdown and the U.S., all of these signs are pointing lower, plain and simple, fundamentally, technically, etc. So stay on the short side, plain and simple. Now let's look at some more charts right quick. Before we do, let's scroll on down and look at the volume here. Note the sell volume increasing, 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 buy volume weak comparatively. So you, again, do not want to be trusting it. I don't have today's volume on the chart yet. It'll be there later. We'll look at it tomorrow. I'm sure it's sell volume. Well, we know it's sell volume, but the main thing is just to stay short. All right, let's have a look at gold. Gold should be doing the opposite of this market right now simply because we're looking at credit issues, currency issues. So people are going to be flocking to gold. We believe that there'd be a support right at this level simply because of the Europe issues. And it's also in America, we have our own currency issues. We'll get into that later. But for now, we believe that was going to set a floor in gold and it would just drive higher. That's exactly what happened. Note this candlestick, very bullish as well as this one. I would, however, whenever you're trading, if you don't want to risk any capital, it's always best to simply advance your stop loss limit after the stock or the market has moved in favor of your call. Simply take your stop, which was down here, and advance it. All right. That way, even if she does, for whatever reason, something comes down the line and she breaks down from here and moves lower, you're stopped out, but you've got yourself a gain locked in place. Okay, that's always the safest way to play. I do see more upside here, but I would still use a advancing stop loss limit on gold. The only thing I'd be long right now is gold. I would be short, or I'd be looking at ETFs that are You can go long an ETF that does the inverse of the overall markets on the bear side. You could do that. That would make sense to me. But as far as being long just about anything else, I would not do it. I don't care how strong the company seems. When you get a major sell-off, which is what we're looking at potential for, every stock falls basically. So don't buck the odds. Stack them in your favor. That's how you play the game like a really smart person, okay? This is the NASDAQ 6-month chart, each one of these candlesticks being 1 day. Note the inverted hammer formation here at the same level as the previous one. Yeah, there's sell pressure just sitting there. That $1 trillion line in the sand that Europe drew, it did not shake these bears. These guys believe in what they're doing here, and I'm with them. It makes perfect sense to be short in this market right here, right now. Big gap below, it's got to be filled. I would be looking for this to sell off. Also, if you one of the things you can learn by watching these charts is you had a big move to the upside, a big pullback, and then a bounce. It doesn't have any strength behind it. That means there's not enough buy pressure at this level to reverse this trend and make a new high. That means the market will then have to sell off and go lower to come up and create that sell pressure, that buy pressure they need. So again, I'm looking for this thing to go lower, and I would expect it to break this 2100 level right here. That's how I would look at that. Okay, this is the SPX. This is a 6-month chart. Each one of these candlesticks being 1 day. You've got the inverted hammer right here. We told you that was a sell signal. She pressed and fought against it, and she fell lower, bounced higher. Same exact setup as we have on the Dow Jones and the NASDAQ. And again, we're seeing an inverted hammer on today's activity underneath the 50-day moving average. All very bearish. I'd stay short right there. That's what it's telling you to do. It was a short here. It's a short here. Nothing's changed. Now, if that one guy that's out there is thinking to himself, maybe Mr. Williams is wrong, maybe Perfect Stock Alert doesn't know what he's talking about, well, take a look at this chart. This is a long-term chart of the Dow Jones Industrial Average. This is a 3-year chart, I maybe 4-year. Each one of these candlesticks being 1 week, and you've had a big sell-off here. I told you guys a while back that this looks like a double top pattern, and you've not had any test of this low down here, so she has to fall. So with just this big selling and then all of a sudden this gap up here, yeah, I would not touch that with my money, your money, or anybody else's. That is not a good place to be going long, in my opinion. Okay, so I'll be looking at that. Also note your last major sell signal, but formed by the RSI indicator, which is one of our most trusted indicators. The last signal was a sell. So even if you did run back up here, all you're going to find is great big bad sell pressure. So no need in trying to fight that, okay? Note the sell volume right there. Yeah, unless you've got more than they do, don't try to fight them, okay? You're not going to win that battle. That's my opinion, but it tends to be right. Again, let's have a look at oil here. She did break down this trend line. It's moving higher here, so short term she is a short for overall markets. If your economy contracts, the world economy contracts, then you expect oil consumption to contract as well, and that would argue in favor of shorts of oil. But this is why I'm not touching it. Again, if oil, which is traded in US dollars, if the US dollar gets hit really bad, which there's potential for, oil could disconnect and go much higher. So I don't want to play that game. There's too many other opportunities out there. I can play it much safer, and I'm just going to avoid shorting oil. That's my take on that. Okay. Also, we'll get into that later. But now that's my look on the markets and the charts. Let's look at the disclaimer. As always, the information provided herein is our opinion only. You can read. I'd like to thank you all again for all your support and sharing our videos with your friends, referring your friends to our website at perfectstockalert.com, where it's 100% free. You can see what's in my portfolio, etc. Thank you. God bless and enjoy the evening.